All right, but joining us now on Pulse of the Day is financial analyst Kalu Aja. It's great to have you join me.
How are you doing? Good morning. Good afternoon.
Good afternoon. All right, let's begin with what we saw happen on the NGX today. We saw all the fugas, right, their stocks down in the red today. And of course, it calls to question the larger performance of bank stocks on the NGX of late, especially the second half of the year. What's your take on that, especially in the midst of recapitalization?
I think that's the key word there, that recapitalization and then this tax that they want to do, this backward tax that they want to do on the FX profits. I think that was pulling back stocks just a bit. In terms of profits, the banks are doing pretty well. I think the top dividend stocks in Nigeria, UBA, and of course, Access 1 and 2 in that dividend yield, paying nearly 11%. So fundamentals for the banks looks good. I think the investing public is still worried about how much they're going to tax based on the federal government. They're going to tax them on their FX revaluation profit. That's really what's going on for now.
All right. So, of course, we're still in the negative real return environment where inflation is still higher than what investors are getting as profits on their investments. What are your thoughts on this? And are there any pointers to a turnaround in the months ahead?
Well, I doubt it. So look at it this way. Early in the year, stocks were giving the real return. Stocks were doing about 36 to 39%. Inflation was still about 33%. Now we sort of changed out a bit. We've seen the stock come down, i.e. the returns, and also inflation has also come down. The pace of gross inflation has also come down. So in terms of real rates, there is no investment in Nigeria today that gives you a real rate of return.
No investment?
Equities, none. There is no regulated investment today that would give you a real rate of return that would beat inflation about 33%. But equities does tend to close that gap significantly. So if you can take the risk, equities looks like a place you should pack some funds in. Then any other dollar type investment, just because it's dollar, it holds the currency for your naira from falling. It might not pay you a lot, but it's sort of like defense your naira from falling. But equities in Nigeria, especially the banking stocks, the industrials, the Dangote, the banks, do offer you that bit of return and also that capital preservation that you seek in, as an investor.
Equities are still for the win here. And, speaking of, we've seen investors ramping up on, treasury bills. So we're moving to the fixed income side of things. Markets there's speculations on rate cuts from the CBN this month. Do you see the CBN taking a cue from other central bankers, holding rates, cutting rates? And do you think that there's enough data to support a rate cut or, rate hold?
If there are two consecutive, should we say, reduction in inflation, the CBN might take action. Mr. Cardoso says it's going to move by fundamentals. We saw last inflation reading was a bit muted, so the rate of growth fell down a bit. If this inflation reading for next month goes down a bit as well, he might pause, not cut rates. Then the third one is when he might cut rates. The US is going to cut rates as well. That might push him. But remember, if the US cuts rate, it gives him a natural advantage in that funds will flow to Nigeria because have a higher, higher federal government rate here that investors will seek out. So I think he would look at the inflation numbers for this quarter, for this month, negative, i.e. the rate of growth is muted. The next NPC meeting, I think he will then decide to cut. He wants to see two consecutive numbers. That would be fundamentally a decision that he would then take based on that.
Yeah, and I mean, the likelihood of two consecutive, disinflation, I mean, we're speaking on, the direction of inflation right now in the months ahead. There have been, a number of positive projections for continued disinflation. We had PwC, they gave 29.5% by the year end. But when you consider latest developments, aka PMS price hike, the $6 billion NNPC debt, for instance, do you see the hopes of disinflation being achievable? And informing CBN's hawkish or dovish stance with interest rates?
I think it's down to food. We've seen the no tax, or is it no duty on food policy by the customs. If that takes hold and food prices fall, then you're going to see food inflation and then, of course, partial to headline inflation. So it's really a food issue. If food prices go down, we have the harvests. So that's going to push food prices down. So I presume, I would maybe hazard a guess, the inflation will not rise in the prior months, simply because the food harvests are here, and also that policy on no duty on food imports. If that then happens, I think that dovetails even what the savings might have on petroleum. Food is 51% of the CPI. Yeah, petroleum is not really. So petroleum gets all the news and all the buzz, but it's really a food issue in Nigeria, really.
But there's a way those who produce food or transport food from farm to market somehow factor transportation costs into that, and that also plays out in the price of food. So we'll see what happens in the end. But let's still stick with rate hikes, but then seeing how those of more mature markets fall down or affect emerging markets. The indications that rate cuts in the US may not be as hawkish, right, as earlier anticipated. Again, traders are pricing in 0.25%. Do you think it's time that we reevaluate the proposed impact on emerging markets? What's your assessment of what decisions will be taken in the US with the Feds right this month, and how that will affect Nigerian markets, currency market, equities, and fixed income?
Well, the Fed is going to cut. We know that. The problem is how many cuts this year. That's what we don't know yet. The markets in the US are pricing 3 rate cuts of 0.25 basis points. So if they do 3, that's 0.75. That's going to be material. What it signals is that the US is the dollar will no longer be this store of value with no risk but high returns. So investors are now beginning to look back at emerging markets. So the Mexican peso, those kind of currencies now become very, very strong in relation to the dollar. What about Nigeria, where they have Euro bonds out there paying almost 9 and 8%? Those returns now begin to look real again because US rates are going to come down. So you see investors doing the foreign portfolio investment flows back to Nigeria because those rates now become real and, should we say, more attractive vis-a-vis US that was 4-5%. So they put if the signals cost 1 basis point this month, but we're going to cut more this year, then the smart money starts to leave the US. If more money flows to Nigerian bonds and Nigerian treasury bills, it then sort of dovetails into equities as well. That would also be bonds, to treasury bills, and then equities. So the signal really that the world is waiting for is for the US Fed to say no more rate hikes, and we're going to aggressively, in this year or beginning of next year, bring down rates to below 3%. That's going to be a real signal for us.
All right. I mean, it's been interesting to see how this pans out. Before I let you go, buy, sell, or hold, I'm going to put you on the spot a bit. So across different sectors, we've seen how they've performed. If you were to buy a stock from one sector, hold a stock from another sector, and sell a stock from another sector, how would you, make those decisions? On the NGX, of course.
Yeah, I'll buy banking, hold industrial. That's the Dangotes and the Boa Cements. What would I sell? I can't tell for now, but I will buy bank and I will hold the guys in the industrials. Yeah.
All right. Thank you very much. It was interesting having you on the show, financial analyst Kalu Aja.